Hello, my name is Anton Novikov. I'm working as financial analyst at Financial Markets Consulting. And today, I'm going to represent you the investment portfolio for June 2016. But first of all, I'd like to start from overviewing the current situation in the international financial markets. And let's start from China. We would like to say that China currently is in a good position of growth. The manufacturing sector as well as service sector are growing there. This situation is going on as well in the Eurozone as well as in the USA. I would like to add that the growth of sales in retail sector in Europe is growing, is increasing, as well as in the USA, but the growth of the sales in the retail sector is bigger in the USA than in the Europe. But still, they are in growing state. So, all of these factors declare that we are in good position of buying the stocks of the US stock market. So, I would like to add also that there is the increase of vehicles sold in the USA during the last month. So all of these factors tell us that we should buy the stocks exactly now, right now, in order to earn from the growth. And let's get back to our investment portfolio and the stocks which we would like to recommend you to buy. The Yahoo, Apple, Johnson&Johnson, Walt Disney, and AT&T. And let's start from Yahoo. We will rather recommend you buying the Yahoo stocks, and this stock still is in the interest of us. So we would like to recommend you buying the stocks of Yahoo, and currently this stock is being traded at their price of 37 per share. And the prospective growth of the shares of Yahoo is from 40 till 47. We would like to recommend you to sell the stocks of Yahoo at the level of $44 per share. So we would like to recommend you buying the stocks of Yahoo due to the positive news. As I already told you, there are lots of companies which are interested in buying the Yahoo as the parts of the Yahoo or as a whole company. And the leaders, which are represented by their AT&T and Verizon, want to buy this company much more than the others. Especially Verizon hired the Bank of America as a financial advisor. I would like to mention you that their Bank of America already been their financial advisor of Yahoo while they wanted to sell the Alibaba stake. So, Bank of America knows a lot about the Yahoo price, the current price, and which would be the best price for their stakes of Yahoo in order to buy them. So, the Verizon is in the good position. That's why we would recommend you buying the stock of Yahoo. That because of the fact that the company would get lots of money, and this money would stimulate the growth of the company, and thus it would increase the interest of investors, and furthermore, it would increase the price of the shares. So buy now at the price of 37 and earn almost like $10 per share. The next company which we would like to recommend you buying right now is the shares of Apple company. They're currently being traded at the price of $97 per share. The prospective growth of the stocks of Apple company is about from 120 till 135. So you may have the chance of earning from investing in Apple company for about 20, 35, probably not $40. So it's a great return on investment. So we are recommending you buying the stocks of Apple due to their growth of the company. They are decreasing the price on the products which they are selling, and this will stimulate the interest of their customers in buying the products of Apple. Thus, it would increase the profits, and furthermore, it would increase the interest of investors in the stocks of Apple. Warren Buffett has already invested almost $1 billion in Apple, and recently he's already bought almost another 6 million shares of Apple company. Also, I would like to add that the company issued the bonds accounted for $1 billion. It will help the Apple company to increase the dividends as thus in the interest of the investors to the stocks of Apple company, as well as it will help the company to invest in producing new products and update the older one. So due to this positive news, we would like to recommend you buying the stocks of Apple company. Then the next company would be the Johnson&Johnson. Johnson&Johnson is a well-known company around the world. We all use the products which produce this company, as well as the products which are related to children, their products which produced in order to take care of your skin, hair, so body care products. And this company is recommended by us due to the fact that this company is buying their Vogue International, the company which is specializing in producing the same products. But the Johnson&Johnson is going to increase and expand the line of products it is selling to the customers. So it would increase the sales and would increase the profit and thus increase the interest of investors to this particular company. So it would stimulate the growth of the price on the shares of Johnson&Johnson. So currently the stocks of Johnson&Johnson is been traded at $114 per share. The prospective growth of their shares of Johnson&Johnson is about 120 till 130. We would like to recommend you to sell the stocks of Johnson&Johnson at the price of $125 per share. So we would like to recommend you buying the stocks of Johnson&Johnson. The next company we would like you to recommend to buy is the Walt Disney Company. We will already recommend you buying the stocks of Walt Disney, and we'll keep recommending you buying the stocks. Currently, the stocks of Walt Disney have been traded at the price of $98 per share. The prospective growth of the stocks of Walt Disney is from 110 till 120. We would like to recommend you selling the stocks of Walt Disney at the price of $115 per share. So we are recommending you buying the stocks of Walt Disney due to their news which are related to their revenue the company get from releasing the films like Zootropolis, Book of Jungle, Captain America, The Civil War. So all of these films bring the Walt Disney almost more than billions of dollars. One only film bring the company something about $1 billion, what is 5 times bigger than their budget of the company. So the company spends almost 200 million on the film and get more than 1 billion in box office. So it's a huge amount, and this company is very famous, and all of the products which it is selling are sold very quickly. So we may say that it's this very company is successful and brings lots of money to the investors which invest in the stocks of this particular company. And so that's why we would like to recommend buying the stocks of Walt Disney. And that's why we consider that their price of shares of Walt Disney would go up, as their revenue which the company get from selling the tickets to these particular films would be reported in the coming reports. So the next company we should like you to recommend you to buy is AT&T company stocks. So this company is very well established, and it has been operating in the business for many years. So we would like to recommend buying the stocks of AT&T company due to the fact that this company is expanding its presence in their Texas, the USA state, by investing almost $40 million in upgrading and expanding its network, wireless and non-wireless networks. So it would increase the number of subscribers, and as well it would furthermore increase their profits and revenue it gets from these subscribers. So it would increase their interest from investors, and furthermore it would increase the price of the share. Currently the stocks of their AT&T company is being traded at the price of $39 per share. The prospective growth of their AT&T stocks is about $45 per share. We would like to recommend you selling the stocks of AT&T company at the price of $33 per share. That's all for now. Thank you for your time. See you. Goodbye.